Welcome back to Nasdaq Trade Talks. I'm your host, Jill Malandrino, Global Markets Reporter at Nasdaq. We've been coming to you live from the Singapore Fintech Festival, and joining me for this segment, we have Stefan Ullrich. He is the Director for Sustainable Finance at Paia Consulting. We're going to take a look at green bonds, and is it a catalyst for change, or is it greenwashing? Stefan, it's great to have you with us, and really the question is, what is the rationale for green bonds?
Jill, thanks for having me. It's great to be here. It's very exciting to see that this is now a central topic for fintech as well. So where did green bonds come from, right? Why green bonds? Why should anybody? It's kind of interesting. It started only 10 years ago. The first green bond ever was issued by the World Bank after they had a request from Swedish investors, Swedish pension funds. They said, okay, we hear all these bad news coming out from the scientific community, and we want to do more than just exclude things. Up until then, it was mostly, if you wanted to do ESG investing, it was exclude this stock, divest from coal, whatever, but nothing that actually harnessed the power of finance. It's like, hey, so how can we invest in a way that helps us bring about change and create good investments, right? And the World Bank worked it out together with SEB back then, and launched the first ever green bond in 2008. And ever since, it's been two-digit growth rates every year. Last year, the issuance was just around 180 billion. So very exciting times to be in this space.
Are you seeing it expand beyond the Nordic region? Because it's really popular there. Are you seeing it expand? And really, who are the current thought leaders in this space?
Okay, so definitely expanding. This is a global, much the same as the topic that gave birth to is a global issue. We're seeing green bonds being a global success story, definitely here in Asia. So the second largest issue of green bonds last year was actually China.
Oh, interesting.
Quite possibly the largest this year. There's some issues there that we may not have time to get into today, as in like what constitutes a green bond, but it goes to show the interest is there across the board. And of course, green bonds, there's also sustainability bonds. I think Nasdaq has a blue bond as of February this year. So you can diversify you can apply the same approach to a lot of the topics that actually concern us today from a sustainability perspective.
Well, we do have actually a couple seconds here. So what is a green bond? What am I investing in? Where is this money going? And do you think that it can be a true catalyst for change? Because sometimes when money comes into the picture, that does help move along some of the issues.
So maybe let's pick a simple example. Like a green bond could, for example, be used to finance solar power station somewhere here in Asia, right? Migrate in an ideal scenario, you would be able to shut down a coal-fired power station because you can now generate electricity renewably. So this is one example where it's fairly clear-cut. There are others where it might not be quite as clear-cut, which is why green bonds come with some extra steps required compared to a normal corporate bond. Generally speaking, they're the same as a corporate bond or even a government bond. But if you say that it's a green bond, then you have to adhere to typically the ICMA green bond principles, and you will get, that's often where we come in, you will get what's called a second party opinion to make sure that what you claim the bond is going to do actually is backed up by the facts of how you're going to use the money. And of course, the biggest bit is the use of proceeds for green bonds is actually fixed. Whereas in lots of other scenarios, you might issue a bond for general company purposes. In this case, you'll actually have to use it for what you say you would be using it. What you say you'll be using it for has to be green, as in bring about change.
And do you think these are actually going to help bring about change?
They better.
Well, I mean, if you have your money there, of course.
Yeah, and it's not just that. It's actually there's three things here to consider. For one thing, it's really important to remind ourselves constantly as to where this started. The IPCC scenarios, the scientific scenarios around climate change, are really grim. And what happened out of that was the Paris Agreement. The Paris Agreement says by 2050 we have to decarbonize the global economy. And green bonds are one of the key elements in any financial strategy that can conceivably get us to this point. So to answer the question, it better not be greenwashing. It has to be the real deal, which of course means two things. Like for one, green bonds today are about 1% to 2% of global issuance of bonds. This clearly has to grow.
Well, I mean, there's good opportunity for growth, though.
There you go. There's opportunity for growth. There's a compelling need for growth. And if they are to do what they're supposed to be doing, which is help us shift the global economy around, well, then clearly 1 to 2% today needs to turn into 50, 60, 70% just a few years from now. So it's a very, very exciting growth story.
All right, thank you so much for joining us at the Singapore Fintech Festival. And thank you for joining me throughout the day on Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.